From Bloomberg World Headquarters in New York, you're in business with Margaret Brennan.
Just ahead on In Business, stocks are on sale, and that is the word from our next guest, who sees the market slump as a potential buying opportunity. He'll join us next. European stocks are in bear market territory. U.S. stocks are on a 5-day losing streak, or at least trying to break out of one as we speak. For Mark Matson, all of that is a sign that it is time to buy. Mark is the CEO of Matson Money, and he joins us from Mason, Ohio. Mark, thanks for joining us on In Business this morning.
You're welcome.
Well, whatever
Pleasure
you
to be
think.
here.
Glad to have you. Whether you think stocks are oversold or undervalued depends a lot on what you think is priced in right now. Whether we're talking recession, whether we're talking about a Greek default. At this point, with the MSCI World Index in a bear market, the S&P 500 also trading around its lows of August, what is priced in?
Well, I think all the knowable and predictable information about the future is already priced in, so it's only going to be the unknowable and unpredictable things that move it going forward. And what I want to tell investors to do right now is when there's a global recession, global dips in the market, that means global opportunity long term. And what most investors are doing, they're making the same classic mistakes. When markets drop, they panic, they get out. The average investor right now is 70% cash. But if they'll stay focused on the next 20 years, forget the next 20 minutes, they would be diversifying internationally, in Europe, in Asia, and they would be seeing this as an opportunity and not as an Armageddon type event.
But Mark, you're saying in 20 years. What about the medium term? Let's just limit it to, say, 10 years or 5 years.
Yeah, there's very few periods of time, even looking at the Great Depression. If you go back and you own equities right before the Great Depression, and you own microcap stocks, value stocks, for that 10-year period, you still beat inflation by 4%. So most investors, even if they're getting ready to retire today, have at least a 10-year time horizon. They need to stay focused on that, because focusing right now in the weeds is going to cause them to make really bad mistakes.
Okay, so if now's a good time to rebalance, so to speak, what are you buying? What would you look at picking up more of right now?
Very few investors are still internationally diversified. So if you were looking to diversify your portfolio, look at Europe, have a portion of your assets there. You got to look towards Asia. You know, and yes, while there's a lot of trouble in Asia, France and Europe, well, we're in Indonesia, China, Taiwan, Malaysia, all the countries. So we're in over 44 countries globally. Don't try to time which country, because you can lose there, and realize that you have to own all of them if you're going to win this game.
I know you also like small cap stocks. Many of those, at least here traded in the U.S., are much more geared towards the domestic economy. Even those traded internationally are traded are exposed, I should say, to local conditions. If that's the case, what kind of themes can you extract from that?
Well, that's actually part of the benefit, because if you own a small company, let's say in Japan or Taiwan, it has very low correlation to what's going on in the United States. So it has great diversification. Academics call that correlation. It just means it has dissimilar price movement. That's hugely beneficial to the portfolio. And yes, there are premiums if you'll buy those microcap stocks, which few investors own. And right now, Scarlett, high book-to-market value stocks. Those are stocks that have high book-to-market value. They have a lot of assets relative to their price. And in that asset category right now, there's a lot of financials, banks, broker-dealers, big financial institutions, and insurance companies.
All right, let's stay with the financials. Within the U.S., are there some good bets?
Well, anything that has a high book-to-market value right now is a long-term hold. You know, Bank of America, Citigroup, they're all asset categories that have high expected returns. 17% of our U.S. portfolio is in financials right now. Everyone likes to talk about buying things when they're low on theory, but very few people actually like to do it with their money. But that's how you make long-term returns. Well,
in the meantime, you're suffering because the banks have not done very well at all over the last couple of weeks and days. What will you be watching for from the banks when they do announce earnings this in the coming season in about 3 weeks' time?
Well, even the banks, I think that's an interesting question, because even the CEOs of these companies don't know what they're going to be making 3 to 6 months down the road. There's
and isn't that
too
the problem,
much
though,
risk
the lack
and too
of
much
visibility?
volatility. Absolutely. That is a huge part of the problem with the economy not getting going and not getting back to growth. But ironically, that's part of the reason that long-term premiums are priced into the price. All this uncertainty is bad for the economy, but all the academic studies show that it actually increases long-term expected returns for stock. And I know it's very painful for investors to actually go through this, but it's only the seasoned investors that get the long-term returns because they can stay in there. If they wait before all this uncertainty is cleared up, they've waited too long, and the market will be back up to all-time highs.
All right, Mark Matson, CEO of Matson Money, urging people to get in right now if you have a long, long-term horizon, perhaps 20 years down the road. Thanks so much.